there were a number of questions, but they all focused around, can we do it from wherever we are, the States, Canada? Yes, you can get a mortgage. You can get approved for a mortgage while you're there before you have a property. You just assume a value and you can get approved. And that approval does mean something. And it's in America, there are pre-approvals that are not necessarily worth anything more than the paper they're written on, but these are actually conditional approvals, and they do have some meaning. Um, Age factors do represent a challenge, but it is possible. A borrower has to be in their mid as after the mid 70s. There's a question, but there are options also for borrowers that are beyond their 70s. There was also a question about the Zakut mortgages. There are prepayments in the regular mortgage market. The Zakut mortgage does not have a prepayment, but keep in mind the largest mortgage you're going to get, that's the government benefit mortgage, the Zakut mortgage, it's probably going to be less than 250,000 shekels, most likely even less than 200,000 shekels. There's another factor that was regarding purchase tax. Jane Ullman is the other webinar that had to be rescheduled. That's very much a question for an attorney. That is one of the best benefits that exists now for Olim, because the purchase tax is one of the largest expenses in the transaction. But you know, touch back and see when Jane will be giving that. The the other factor regarding regarding special needs, or a couple of other specific things, again, please feel free to reach out to me at the email. Um, there was discussions about people with only investment income, people with assets. There were a number of things that are really beyond the scope of getting into the details here, and it really needs to get into your personal details. So please feel free to reach out to me, and we'll get those things answered. There are some questions about sort of the ticking your rights if you've made Aliyah already, and I would leave that to the experts in Nefesh B'Nefesh, because there are other Olah rights that you have to worry about, sort of the when they're going to expire. Vis-a-vis the mortgage, between the fact that you have that Zakut mortgage with time being the only factor for a while, and for a lot of people, because of the loan amount, it's not necessarily something that's always practical to use. I would be more concerned about your other Aliyah rights, and you should speak to one of the Aliyah, pre-Aliyah advisors. Again, there's a question about down payment, etc. Um, Keep in mind, as I mentioned in the webinar and the recording, even for an Israeli, in most cases, well, in all cases, technically, the 25% is the minimum down payment of the property value. You can't get more financing than 75%. Um, for non-citizens, the minimum down payment is 50%. That being said, people that want to start the process before they've made Aliyah, um, if you look at my LinkedIn, many of those people that gave me recommendations were actually people just like you. Um, they reached out. We ended up getting them approved before they actually made Aliyah. So by the time they came here, they knew exactly what they wanted and they were ready. Yeah, there's another specific question in terms of um, various mortgage fees and insurance, etc. Uh, again, a little too specific because there's a number of factors. But reach out with your particular questions in your situation.
Moshe, I posted your email and your phone number in the chat. So if anybody missed it from the slide, you can just go over to the chat and we'll also include it tomorrow in the email with a link to the recording.
Right, and that's a WhatsApp number, so feel free to reach out. But if it's all the same, email is a lot more trackable. Just one question that came up is worth everybody understanding. In the States, there's major differences between primary residence, owner occupied, second home, investment property. In Israel, the only time that ever comes up is in the discount on the property, on the purchase tax. Again, Jane's not here for that, but vis-a-vis the mortgage, there is no difference. It's citizenship that's going to determine, and then how many properties you own. So an Israeli who owns more than one property, they cannot get 75% on the second property unless they are planning on selling the first one within a given amount of time that's dictated by law. Currently, that period is 2 years, but that's changed a few times.
Also, I just want to add that the Jane's presentation on buying a home in Israel, we have it up on our YouTube channel from last year. So it is possible that things are not 100% the same, but I'm happy to send a link to that YouTube video in the chat for people who want to learn about, about buying a home. And Moshe, I saw a few people asking, is it deductible against your American income tax?
So I actually saw the questions about Israeli. Um, I am not an accountant. I'm not qualified to answer for accounting sake. But from a layman's point of view, I have a lot of clients that they do, their accountants do file the interest expense here either as their second home, primary home, and that brings up a whole nother question about how they're filing. But there was a couple of people asked, is it deductible in Israel? Again, I'm not an accountant, but as far as I know, it is not a deduction that is used here. But vis-a-vis the states, you have to speak to your accountant. But there are a lot of people that I know do claim the interest deduction. Again, depends if you haven't already used your interest deduction in the states, because it's only up to a certain amount. You're only allowed a certain amount of mortgage, a certain amount of interest per month um, for that IRS deduction.
Okay, so for those of you asking about buying a home question, I just put that in the webinar chat, so you should be able to click on that there.
Yeah, people ask about the 10-20% down payment. That's just to get the contract going. It doesn't mean you're getting 80 or 90% financing. It means the builder will basically delay payments, the balance of the payments, for a certain amount of time um, after you've made that 10 or 20% down payment. And the Bank of Israel actually restricted what was happening, where people would make a 10% uh, payment to the builder, and then the builder would take out a loan, would arrange a loan for the borrowers, and the builder would pay the interest for a period of a few years, very often 3 years. That over the past 2 months has become very restrictive. So at the end of the day, you're always going to need to come in with 25% down payment. Keep in mind that the inflation linkage that is included in the purchase contracts is not covered by the mortgage. So any inflation linkage over the years of the contract, you have to add to your down payment. Okay, and another interesting question that I've been through a lot. So depending on what state you live in the state in the U.S., um, you may or may not be familiar with community property. Israel is community property state. So with spouses, when each spouse has some type of different status, either one is Israeli, one's not, or one owns a property and the other doesn't, it really depends on the situation. It could be that you can get the benefit, the better benefit of the one spouse, or it could be that the spouse that doesn't own a property is going to be limited by the fact that the other spouse owns property. There's a number of factors that are, sort of go into the weeds that are beyond the webinar. But feel free to reach out. I can explain to you what the issues are and what has happened with other clients. There, just the question. There was a question about assumptions, which is very interesting. There's no such thing as assumptions. Um, in Israel, in the U.S., it's very common. You can assume when you assume a mortgage, but Israel has something else that's actually a little more useful, where you drag it with you. So you sell a property, and let's say you don't want to. The mortgage is at a great rate, and you don't want to lose it. So what happens is, as opposed to paying the mortgage off, when whoever's buying your property gives the money, the bank will take the mortgage, whatever your existing mortgage balance is, plus X percent. So let's say, for argument's sake, let's say they'll take 110% of the mortgage amount from the proceeds of whoever just bought your property from you. They'll put it in an account. They take the mortgage lien off the property that you just sold, and they put the mortgage lien on that account. You continue paying your mortgage payments like you always have. When you find the new property, then that mortgage lien ends up going on the new property, and the money that was in the account goes to whoever you're buying the property from. So you effectively move the mortgage from one property to the next. So there's some other questions in terms of, listen, feel free to reach out to me. This follow-up calls from this are community service I do. Anything beyond that we can talk about. But there's a question about loan to value on properties and construction. So if you're buying from a builder and the builder has construction financing and the oversight, then you actually don't need an appraisal, and the purchase price is considered the value. If you are building it, or if you're buying from a builder that didn't use the oversight and basically financed it themselves, then you do need an appraisal, and it is funded, as the value. In other words, it looks at the current value. So in the end, you can get whatever loan to value you qualify for, but it'll only be in stages. But if you're buying from a builder that has construction financing and the oversight, then you're you're basically, the purchase price is the value, and you get a mortgage that, after you've made your down payment, and sometimes you don't need to make all the down payment, but it will fund according to the contract, the payments in the contract. There's a question about keeping. How long do you need to keep the mortgage, the discounted mortgage, again, keep in mind these mortgages for most Olim are, 200,000 shekels or less. Um, I'm not aware of any that they're not giving you a grant. There used to be a time factor when there were benefits many years ago where somebody would get a mortgage and part of it would be forgiven if they stayed in the property for X number of years, whether it was 7, 10, whatever the case may be. These mortgages, there are basically two benefits. You're getting a discount based on the inflation linked interest rate mortgage market, and there's no prepayment penalty. Those are the only two benefits. I'm not aware of any time requirements of keeping the mortgage.
I just want to be mindful of your time, Moshe. It's 5 to 7, so I think we have time for one or two more questions, and then we'll wrap it up. And again, if your question wasn't answered, if it was more specific than what was geared towards the general population on this webinar, then please email you can either email events@nbn.org.il and we'll forward the message on to Moshe, or you can message him directly. If you scroll up in the chat, his email and his phone number are there. And again, we'll include that in the email tomorrow along with the recording.
Yeah, there's one or two questions more. We'll wrap it up with that. Just again, regarding when you're buying from a builder, um, you have, depending on your citizenship, your financial qualification, the number of properties you own, you have certain restrictions in terms of a loan to value. Whatever that loan to value is, the assuming the builder has construction financing and the construction oversight, then you can get a mortgage to pay off the balance of the builder, of whatever's owed the builder, as long as you've put in the prerequisite amount of equity, um, that is required per the loan to value requirements, that you have. There was a question about owning with, um, joint tenancy. Let's put that aside because that's actually a factor in the U.S. title, but you can own it with somebody else that is not a spouse, but it does bring up questions. I mean, it is not a blanket thing. It really depends on your situation, how they're related to you, etc., the type of property.
Okay, do you want to do maybe one more, or we've answered all the general ones?
Yeah, I think just to I'm assuming anonymous is not your last name or first name, um, but the 400,000, as long as you've qualified for that amount, both from the loan to value basis and from the credit basis, that can go pay off the builder. Um, and when you get your keys, et cetera, is going to be dependent on the contract with the builder, and usually those payments are made based on the purchase contract, the requirements that between you and the developer.
Okay, I think that's about it. I know that there are still some unanswered questions. So again, we appreciate your patience and we apologize we're not able to get to all of them. If you have a specific question that wasn't answered, please reach out to Moshe directly. I just put his contact information again in the chat. and we'll be happy to connect you to him. If you don't have, if you're not able to copy down his, you can email events. And tomorrow you will get an email with a link to the recording, as well as his contact information and any helpful links and resources that were mentioned during the presentation. So thank you so much to Moshe. Thank you to Yitz and Kasriel, our Aliyah experts on the back end, answering questions. And you're welcome to stay on if you'd like to keep addressing questions, but I just wanted to, be mindful of your time because it is the evening. So thank you everyone for joining, and we hope it was helpful.
Have a great day, everybody.